Hey everyone, it's Julie here with TipRanks. Today we're taking a look at 3 high dividend yield ETFs, including one that pays out on a monthly basis. So let's get into it. All right, guys, welcome back. Thank you all so much for being here. I hope your week is off to a great start. Today, we're talking about dividend-focused ETFs, and these are some of my favorite investment vehicles for a few reasons. First of all, diversification. ETFs in general offer exposure to dozens, if not hundreds, of high-quality stocks all in one easy place. Second is that passive income. These dividend-focused ETFs offer that consistent passive income, and this can also lead to compound growth if you're doing a dividend reinvestment plan where those dividends go right back into that same fund. And third is simplicity. These ETFs are great for just setting and forgetting once you find one that meets your investment objectives, so you don't have to be constantly rebalancing and reorganizing your portfolio. So with that in mind, I took a look at the TipRanks ETF screener to find 3 ETFs that all vary in size and objective, but have one thing in common: a focus on high dividend stocks. Found under the TipRanks screener menu, we set in a few different filters here. I want to focus on US equities with a low to moderate expense ratio. I then went into add filters and put in the focus tab here where we selected high dividend yield, and that gave us our list of ETFs below. So in today's video, we're going to take a quick look at these ETFs, what their investment objective is, and what those top 10 holdings look like. Just before we get into that, this is a reminder that TipRanks is having their end of quarter sale right now, so you can unlock 40% off premium and ultimate subscriptions by heading on over to the TipRanks website or following the links in the description down below. If you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Now let's dive right into these 3 dividend ETFs. We're going to kick things off today with our largest and probably best known of the group, with the Schwab US Equity Dividend ETF. Trading under the ticker SCHD, they're currently priced just shy of $28 per share. They've been around since 2011 and have a very low expense ratio at 0.06%. In the past year, they've gained about 8% overall. In the last few months, fairly flat with all the market downturns at 0.62%. SCHD focuses on income-generating U.S. equities that are known for their strong dividend performance. They stand out in the broad-based niche by offering a well-rounded exposure to a variety of sectors, thereby mitigating risk while enhancing potential returns. With their emphasis on quality and sustainability, the fund targets companies that not only deliver high dividends, but also demonstrate the ability to maintain and grow these payouts over time. It tracks the Dow Jones US 100 index and has a whopping $77.5 billion in assets under management, and that figure places it on the top 25 largest ETFs by size list. Taking a look at the ETF's holdings, their top 10 holdings make up 43% of the ETF, and we have some very recognizable names in that list, including AbbVie, Amgen, Coca-Cola, Chevron, Pfizer, Bristol-Myers Squibb, Verizon Communications, Cisco, Altria, and BlackRock. Of course, it is 100% weighted in the United States, and the leading sectors include healthcare, financial, and consumer defensive. SCHD does pay out their dividend on a quarterly basis. Their last dividend payment came in just over 26 cents per share for a current dividend yield of 3.53%, and the next ex-dividend date is coming up soon on March 26th. That dividend has grown since the ETF's inception, and over the last 5 years, they do have an impressive compound annual growth rate of over 11.5%. Second on our list is the Invesco S&P 500 Ultra Dividend Revenue ETF. Trading under the ticker RDIV, they're currently priced just shy of $49 per share. They've been around since 2013, have a slightly higher expense ratio at 0.39%, but in the past year they have gained about 13%, up 0.3% in the last 3 months. This ETF focuses on companies with a substantial dividend payout to provide investors with a robust income stream. By leveraging a revenue-weighted strategy, RDIV ensures that investors are exposed to financially sound companies that not only promise high dividends, but also demonstrate strong business fundamentals. Now, this ETF is based on the S&P 900 Dividend Revenue Weighted Index. However, from that 900 stocks, they only pick their top 60 based on their own criteria, and that is rebalanced and reweighted by dividend yield and revenue every single quarter, which is what leads to that slightly higher management expense ratio as well. With nearly $800 million in total assets, they are heavily weighted in their top 10 at nearly 50%. Once again, a lot of names you're going to recognize in this list. We have CVS Health, Phillips Morris, Chevron, Bristol Myers Squibb, Ford Motors, Prudential Financials, US Bancorp, Best Buy, HF Sinclair, and 3M. Once again, 100% weighted in the United States, and this one's top sectors are financial, consumer cyclical, then healthcare. And RDIV also pays out their dividend on a quarterly basis. With the current quarterly dividend of about 51 cents, their dividend yield comes in above 4%. Looking at their 5-year compound annual growth rate, it comes in just shy of 5%. If you've made it all the way to our third dividend ETF, then this is a reminder to make sure you've hit that thumbs up button. We've saved our monthly dividend payer for last with the Global X SuperDividend US ETF. Trading under the ticker DIV, they're currently priced at $18.74. They've also been around since 2013, and in the past year have gained over 15%, and in the last 3 months are actually up 4.4%. Their expense ratio is a little bit higher as well at 0.45%. This ETF is designed for investors seeking consistent monthly income from high dividend yields. With a strategic emphasis on sectors historically recognized for their dividend strength, such as utilities, consumer staples, and real estate, they seek to balance the pursuit of income with the potential for capital appreciation. It is particularly appealing to income-focused investors aiming to enhance their portfolio's yield while maintaining exposure to a wide range of industries. They track an index that focuses on 50 high-yielding but low-volatility equities, with total assets of $654 million, and the top 10 making up just 22% of the overall holdings. Looking at those stocks in the top 10, we do have a few different names in here, including B&G Foods, Ardagh Metal Packaging, Altria, Natural Health Investors, Avistra, Universal Health Realty, Verizon, Alexander's Incorporated, Northwestern, and Universal Corporation. I don't know about you guys, I recognize a few, but definitely not all of those as common as some of the other ETFs. We are 100% weighted in the States here, with energy making up the top sector, followed by real estate and utilities. The DIV ETF has been paying out a monthly distribution for 11 years running. And with the current monthly dividend just above 10 cents per share, that gives them a dividend yield of 5.5%. The last payment came out on March 12th. So that is a quick look at 3 ETFs, all differing in size and objective, but with one common focus, and that is high dividend stocks. Let me know your favorite of the bunch or what other ETFs you guys love in this sector. You know, I always appreciate hearing from you. Please keep in mind these videos are never a suggestion to buy or sell any specific stock, so make sure you're always doing your own research and due diligence. Thank you so much for watching. Have a great day, and I'll see you back here next time.